let's look at trend reversal pattern. They help you in predicting the reverse of the market. Head and shoulder pattern and inverse head and shoulder, double top and the triple tops and bottoms. So these are trend reversal patterns. Majorly the market is going to make before reversing. The other time I told you the trend change patterns. There is a difference between trend reversal patterns and trend change patterns. Trend change confirms a trend reversal, but some of these trend reversal patterns, they can form and the market doesn't respect them. Start with a head and shoulder pattern. If you remember how an uptrend or a downtrend moves, we said in an uptrend, you have price moving, it makes. We are on trend reversal patterns.
Trend reversal
How
patterns,
does
yes.
the trend change from an uptrend to a downtrend, and also how does it change from a downtrend to an uptrend?
An uptrend.
If you remember of the concepts I told you, drop, base, drop. At times these patterns form on the base where the market is resting. We want to see these patterns to tell what is likely to happen next. So in an uptrend, you will have price moving, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then it gives you a high. It comes, this move you're seeing, instead of giving you a higher low and go up, but what it does is this. It comes and gives you equal lows, forming a support level or a demand level. This is what I mean. Price comes, gives you this, as if it is going to continue up. I have this pattern I've drawn. You see this is a clear moving uptrend through the higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then price gives you this move up. It comes back down. It doesn't break below, but instead it gives you equal lows here. If you remember the concept of market structure, I told you price in the past was here and it went up. So you see a strong move going up. So when price comes back in the same area, this level acts as support or a demand zone. You again see buyers trying to push price higher, but they fail, break above this high. It gives you what we call a failure swing.
A failure swing,
If you remember the knowledge of failure swing, that concept.
And the red line is the change of character, right?
This one here, yes.
Depending on how further the market goes.
So what I want you to see here, this pattern you're seeing here. Okay. So price comes, gives you this. It also comes and gives you the same thing. You have an impulsive move, a pullback, impulsive move, pullback, impulsive move, pullback. Then price gives you a high. It comes and gives you equal lows instead of breaking down. I will also show you when it breaks down. But for now, it gives us equal lows. It also comes and stops on the same level here. I see these levels. It forms the resistance on the left. It again goes and finds resistance as it is trying to go up on the same spot.
Same zone.
Yes. So this one forms what we call a head and shoulder pattern. So price gives you, this is an uptrend. Let me put for you. Price is giving you a higher high and is also giving you higher lows, higher low. Then you have here higher high and you then have a higher low. Price comes, gives you another higher high here. it gives you a higher low, this one. But this higher low gives you a higher high here. Then price comes and makes same lows with this. This is also an equal low with this one. Then it fails to break above this resistance on the previous side. It gives a left head and right shoulder. A break below this move that comes and breaks this support level here is what confirms the pattern. We call this neckline, and then this we call it a left shoulder. So this one we call it a left shoulder. Then this we call it right shoulder. And then this one, the head. Assuming this is you right now, where you have sat on the ground is the support level, which forms the neckline. The support level forms the what? The neckline. So that support level forms the neckline. Now, look at your left shoulder, touch it. Also touch your head and also touch on your right shoulder. You will see that is a left head and right shoulder pattern. If I'm not mistaken, this is your left shoulder, this is your head, and this is your right shoulder. Now, this level, which forms support, we call it a neckline. Call it a what?
A neckline.
A neckline. Now, there is another tool that we use to measure this as a beginner trader. Come here, you see this head and shoulders.
Yes, I know that one.
So when you click on it, it adds here.
It's added to your favorites.
Then you put, this is the left shoulder.
And it guides you.
Then you have your head. And then you have your neckline. Then the right shoulder. And then when price breaks the neckline, the pattern is deemed complete. Without price breaking the neckline, the pattern is deemed incomplete. Not because you've seen a pattern, it means the market is going to reverse the way you want. Now, these patterns form as a result of indecision, as a result of momentum loss in the market. But you can see price coming, it gives you a left shoulder, a head, and a right shoulder, and it doesn't break the neckline. It comes and gets support, it continues going up. That one has happened very many times. And if you remind me, I will show you where such a pattern has formed. So you have a left shoulder, head, right shoulder, and the market doesn't go the way you want. Now, when such happens and the market is going up, that move is always very, very strong. If the market forms a left head and right shoulder pattern and doesn't respect it, if it is to continue up, it will be very strong, very, very strong. You need to know that we use them when they form at a key level. We want to see these patterns form at a key level. It could be support and resistance. It could be supply and demand. And in the future, I'll teach you about market manipulations. At times, maybe the market wanted to reverse here, but the market is forced to go up in the opposite direction of where it wants to go, and then it forms either a false breakout or it is just manipulated. Because in the market, manipulation can also come, it can be done, but also there is what we call false breakout, especially when there is trend exhaustion. Trend exhaustion can also cause false breakout, but also market makers can also use shady methods to manipulate price. So if they do that, that's when you see some of these patterns forming. So you have understood how this pattern forms. We have a left shoulder, a head, and a right shoulder. Now, the most important thing here is this. You want to have this neckline sit. You want to see these levels sit on the same neckline. And we also want to see the shoulders on the same resistance level like this. That is a picture perfect of a head and shoulder pattern. But there are others that are not going to meet such requirement. Let's say, for example, you can have price coming like this, it moves up, you have a higher high, a higher low, a higher high, a higher low, a higher high, and then price comes, it gives a higher low, it gives you a higher high, and then it comes, it gives you equal lows here. But this, instead of price coming to sit on the resistance on the left, it goes above it a little bit. Then it comes and breaks the neckline. Now these ones, we call them imperfect head and shoulders patterns. It is imperfect, reason being the two shoulders are not sitting on the same key level. This one breaks above a little bit. But the most important thing is here. Our main interest is this. You remember the trend change pattern I taught you? This one, this is the most important thing. We want to see this pattern form, the trend change pattern. Lower high and the lower low. That is the most important thing. You have this high, low, lower high, lower low. So those ones, we call them imperfect head and shoulders pattern. You can also have this. You can have this one where price is moving in an uptrend, giving you higher highs, higher lows, higher highs, higher lows, higher highs. Then price comes, it gives you a higher low. It then comes, gives you a lower high, and then it breaks down, but giving you same highs here. This is also termed as an imperfect head and shoulder pattern. Why? Because the two necklines, they don't meet on the same level. Shoulders, they meet at the same resistance level. So they also become imperfect. But because they are imperfect, it doesn't mean the market is not going to respect them. As I told you, the most important thing is for you to observe this trend change pattern, lower high and the lower low. That is the pattern you want to observe. Once you can see that pattern, then you're good to go. You have no problem with the trading, because there are very many people who are going to learn head and shoulders patterns, but they will see this instead of seeing this picture perfect. But this is also still a head and shoulder pattern. This reversal point gives us a key level. The second point doesn't touch, but it goes and turns in the same resistance level, and then it drops. So this is the neckline. You can also say this is a slanted neckline. If you want, you can say this one is a slanted neckline, upwards slanted neckline. Now this one, we use it in confluence with other things to confirm a reversal, but it is also still a neckline. But you can see its neckline is slanted, not like this one, which is picture perfect. It still remains a left head and right shoulder pattern. Because, as I said, always use this tool. It will guide you. Now, when you put in this, you can see this is a head and shoulder pattern. When it breaks the neckline, then the pattern is confirmed. We confirm the pattern after the break. If the pattern is not broken, then that means the pattern is not valid. There is also another one which can form. You can also have one, it gives you this, and then price comes, it doesn't touch the same support level of the neckline, but also it doesn't align on the same neckline, and then it comes and breaks the neckline. This is our key level here. Price didn't touch it, and also didn't settle at the same level on the left. This high is a bit longer than the left shoulder. It is still also a left head and right shoulder pattern, but imperfect. So the market does all these things. It's not that the market will print left head and right shoulder pattern the way you want. It is rare because the market as a whole is imperfect. It's not going to give you perfect pattern. But you, as someone who is learning from me, all I want to say is you need to know these things. When you see the market doing them tomorrow, don't get surprised because the market doesn't move perfectly the way you want it, but it moves as an approximation of what you know. So you have a left shoulder, a head, a right shoulder, and then this neckline is broken. If you want, in the future, I will teach you other patterns. You will see that this is also part of other patterns. That when you know how to see these things, it allows you to make good decisions. But the most important thing, don't forget, I told you the most important thing why a head and shoulder, left head and right shoulder pattern works is this. You want to see a lower high and a lower low. That is the pattern you want. This one. You're seeing a lower low, a lower high, and a lower low. Once it breaks below, it confirms a reversal. Upward slanted neckline. Once you get a bearish momentum candle break below, trend confirmed. You enter. Right now we are learning, but I'll also teach you how to enter these patterns slowly. Now, the other one is the higher quality pattern of head and shoulder. You have this left shoulder, you have price moving in an uptrend, giving you higher low, higher high, higher low, higher high, and then price comes and gives you a lower low instead of equal lows or higher low. It gives you a lower low here, and it comes back, sits on the same resistance level, and then it reverses. So a break below the neckline is what confirms a reversal. Now this is the highest quality pattern from the head and shoulders patterns. When you see this most of the time,
the question, the break should be below the neckline or within the neckline?
This one's neckline is slanted neckline. Are you seeing this? This neckline is slanted. You have the price making higher highs and higher lows. It then sits here and pushes up, then comes and makes a lower low. If you look at this lower low, and then goes back and gives you equal highs. I mean the resistance. Now I will teach you also that the resistance on the left always holds more weight when price is trying to go up. If price has been going up like this, you see this, and then it begins to go down. Each time it is going up and it gets into this key level, it always finds difficulty and it will be forced to go down. But here the most important thing, I want you to see this. We have a slanted neckline. We also have price, because this price is it has already made a lower low. That's why it is called a high quality reversal pattern. If I bring my tool, this one, left shoulder, head, right shoulder, and then you have a slanted neckline. This one, it is of higher quality because the price already gave you a lower low here. Are you seeing? And the other thing is price is already in a moving downtrend. This is already a moving downtrend. This one, because here price came and gave you a low, this low.
A lower high and
I
a
mean a
lower
lower low. Price came and gave you a lower low here. This lower low is what tells you that indeed price is likely to reverse. This lower low it formed. So this is a very powerful and of high quality reversal pattern. Now these patterns we don't want to see, when we want to see them form on the higher time frame. On the higher time frame, they tell you the big picture of what is likely to happen. If you see them on the monthly, if you see them on the weekly, if you see them on the daily time frame, they hold more weight. So that is a head and shoulder pattern. I've showed you the imperfect ones, how they form, the high quality ones. Now the thing is, there is one thing about learning and one thing about applying them. That's why at times people know them, but applying them is a problem. And that's what complicates trading, because you can know something, but you applying it becomes a problem.
The problem is if you're not able to see it.
That's it. So these head and shoulders pattern, they mostly occur in an uptrend, but there are very many variations of head and shoulders patterns, because you can also have price coming to, let me say it is a downtrend. You have lower highs, lower lows, lower highs, lower lows. Maybe price comes and makes equal lows here. Price goes up, gives you a head. So this is also still a head and shoulder pattern, where you have your neckline. You have your neckline form here at the key level. This, and then you have your head and shoulder pattern, your left shoulder. You also have the right shoulder, and also you have the head, this being your head, this one. And now the psychology behind this is, when you see price in a downtrend and it shows you a left head and right shoulder pattern, it simply tells you that the market rested before continuing. I repeat myself.
Can you repeat that, please? If you see.
I repeat, if you see price is in a downtrend, let me say you see this is in a downtrend, and you see a head and a left head and right shoulder pattern that forms, you even see price comes and breaks below it. That means the market rested before continuing. If you remember our concepts of drop, base, drop, you have a drop and then price forms a base, it rests, and I told you in that base you always look for any price action that tells you, because a base forms as a result of indecision, as a result of momentum loss. There is a lot of infighting whereby buyers say let's buy, sellers say let's sell, so there is no one in control. Now if this pattern forms and price continue to go lower, it means that the market simply rested to allow those who wanted to get out, those who wanted to join the trend to get in, and then price continue down. But as I said, we want to see these patterns form on the higher time frame. We want to see them form on the monthly, we want to see them form on the weekly, we want to see them form on the daily for us to trade them well. Then on the lower time frame, in most cases, they bring in a lot of noise. So if you don't know how to trade the lower time frame, you see these patterns, at times they tend to fake out. But if you're trading these lower time frames, you can use them as confirmations to your entries, just as we shall see in the future. For now, we are learning how a head and shoulder pattern looks like. So all those other imperfect patterns I told you, they can also occur just like the way this one has formed. I repeat, when you see a head and shoulder pattern in already a moving downtrend, it means the market rested before continuing. That's it. Okay. Let's look at the inverse head and shoulder pattern. Just like the name itself, it is the inverse of the head and shoulder pattern. So here you have price broke. It is in a downtrend, and you know how to differentiate between a downtrend and an uptrend. Then price comes, gives a low. Buyers step in to push price higher. It gives equal highs. Then price comes down, makes equal lows with this, and then it breaks above. This one is an inverse head and shoulder pattern. Why? Price gave you equal lows here. It also gave you equal highs, forming a neckline. Let me mark it for you. This is a neckline. Then this is a left shoulder. We have a head. Let me write. This is a head, and then this is your left shoulder. Right shoulder. This right shoulder forms, if you remember, our failure swing. We have price giving you a low or lower high, assuming it is coming from an uptrend. You have higher high. This is a higher high. You also have another lower high, this one, which is our left shoulder. You have a higher high, which forms a neckline. You have a lower low, which forms the head. And then you have here equal highs. Then you have a lower high and a breakout. But the most important thing here is you want to identify this trend change pattern. If you can see this, you have no problem with trading. See that pattern which I've marked, I've drawn. The start of a new trend is what is represented in an inverse head and shoulder pattern. The start of this one, the new trend, this pattern. If you remember trend change patterns, this is a higher low and a breakout confirming a bullish bias. So this is a neckline, and a break above the neckline is what confirms the pattern. Please, these things you need to understand them very well. If you don't understand them, you ask. They look simple, but on the chart, they become a little bit complicated. Don't find yourself fighting with the charts. These are trend reversal patterns. Any question?
No, no questions.
Now, just like as I taught you with the trend, I mean the head and shoulder pattern, the same thing applies to this. It can also have some imperfectness. It may not appear picture perfect, just like the way this one is. My students know these things very well. When they see a head and shoulder pattern, which is not like the usual one, this is picture perfect. But at times the market is not perfect. Yes. So don't get surprised tomorrow when you learn this. Tomorrow you see something different. That's why I have to teach you, because the fact is, I can tell you, there are people who only trade head and shoulder patterns, and they are profitable. But the fact is, anything you trade, you need to be having information, the right information about it. Don't go and see someone trading head and shoulders patterns. You say, hey, this person is trading head and shoulders patterns, you also copy. That person has mastered that art. The person knows which head and shoulder pattern am I going to trade and which one I should not trade. And that is the difference between someone who will make money using the pattern and who will not make money. So don't just copy things and paste. You need to backtest them, you need to check them. So this left shoulder head and the right shoulder, the inverse, it also has imperfect patterns that comes along with it. One, you can have a clean downtrend, price is moving in a downtrend, making lower highs, lower lows. Then you see price doesn't come to sit here on the same neckline. Instead, it makes a lower high and a higher low. Then it breaks above. It comes and breaks here. So what does it tell you? Because it did not make the same neckline as you want it, this one, it doesn't stop it from being a left head and right shoulder pattern. As long as these points meet these ones, you want to see these points still meeting at the same meet at the same key level for you to tell this is an imperfect head and shoulder pattern. You have a left shoulder, a head, a right shoulder, and a break above this neckline is what confirms a reversal. Without a clean break, the reversal is not confirmed. So you want to see a break above this neckline to confirm that indeed buyers are willing to push price higher. Bears are no longer in control, bulls have taken over. That's in case you're trading these patterns. If you see this, a left shoulder head, or we can say it has a slanted neckline. These patterns do happen in the market, do form. You have a downwards slanted neckline. So when you see this, it can be an imperfect pattern. Now, at times, really, these patterns will form. You may not see them. To an untrained eye, you only realize when they have already formed that, oh, this was an imperfect head and shoulder pattern. But you as a trader, when you know some of these things, price comes back on the same low, it gives you good price action, look for to enter. Because someone who is a position trader, someone who is a swing trader, you're not going to trade like the market, like these scalpers, someone who is just entering the market and scalping 10 pips, 20 pips, 50 pips. You may be someone who targets, you say, okay, I will enter here, stop loss down here, and you want to ride a fresh trend, but you want to catch a trend before it leaves you. I'll also teach you fresh trends and trend exhaustions. So that is a break above this slanted neckline confirms a reversal. That is variation 1. Variation 2, you can have price. Variation 2 of imperfect, you can have price in a downtrend. Price gives you this left shoulder, it gives you a head. Then it comes and it forms equal highs, but these left shoulder and head shoulder, they don't line up, and still price breaks above. So when you see that, that means it was an imperfect head and shoulder pattern. It is still a head and shoulder pattern because still it gave you a neckline which sat on the same level, but it's just that the heads are imperfect themselves. And then you have a break above, giving you, confirming a reversal to the upside. So that is variation number 2 of imperfect head and shoulder pattern. Then the other one, you can have price, gives you the same, it gives you a neckline. Then price doesn't break above the neckline, but it gives you same equal lows, and then it goes up. So the other one, then the other one which I've not showed is this. You can have price, gives you this, it comes, gives you a low, then it comes, it gives you this, and then it breaks above. This is also an imperfect because the target is price either respects the same head and shoulder spots or key levels. But now this one, this pattern you're seeing here, if you happen to come across it, it did not line up with this one. Really, this is imperfect in nature. Even identifying such a pattern on the chart becomes a very, very big problem. So this pattern, this neckline having gone past where it was supposed, at times it could be as a result of false breakout, at times it could be as a result of different reasons. But once you get to see these patterns, you should be able to tell that this is what is happening. You as someone who wants to make money from the markets, that's why I told you these are retail patterns. Once a retail trader sees this, knows what he or she will know what to do, either to buy or to sell. But they do happen. So I don't want you to know only this, have some clue about these ones. Now the beauty about trading is you can decide and say that for me, this one, I will not trade it. So that means even if you see it happening or taking place on your charts, you don't trade it. Because all these things we are learning them because we want to get what we call edge. Just entry signals that are going to tell us buy or sell. But we want to trade with the right direction of the market. So this is imperfect because this neckline does not line together. It is a bit higher than this other neckline. It becomes an imperfect head and shoulder pattern. There are very many, but the most important thing is for you to have a clue. There are other variations. The other variation and the high quality one is when you have price is in a clear and a moving downtrend, it gives you a higher high, and then it comes for a higher low, it goes up. This is a very high quality trend reversal head and shoulder pattern. Why? Because price is already in a moving trend. You have this slanted neckline and you have this higher low. But above all, you have a higher high, this higher high. Buyers flex their muscles, they are very strong, and they pushed price past the previous. Now, this pullback is what they use to close their positions, and then they get in here. As a conservative trader, you can wait for price to break the neckline. But also, I will teach you how to enter down here in case you spot such a pattern on the higher time frame. How do you trade following the direction of the market? Trader, we need to know these things. So that's it.
Yes, so if that right shoulder, if it already breaks the trend line, like you first drew it when it was breaking the trend line, doesn't that already confirm a change in the market structure, a change in trend?
Which one? The one I've just drawn this?
No, at first you first drew that the right shoulder, yeah, that one, was bypassing the trend line. Doesn't that
This
already
one.
confirm a change?
This one.
Yeah.
Okay, now a break of when price
You know
breaks
why
this.
do you know why I'm asking? Because here on the left would have the fragile swing.
This one, price breaking above. It is a sign that buyers are stronger and willing to push price higher, but it's not a confirmation. They broke above, right? But it's not a confirmation. The only confirmation is when price fails to break below here and it gives you a higher low. And then this breaks and gives you a higher high. So that one is a fully confirmed trend change pattern. The most important thing is this pattern you're seeing. But the beauty with this, it has already given you a higher high, which is change of character. So this is the most important thing, a higher low and a higher high. Okay, the reason why I'm saying you need to wait for, this is a signal. Now you can enter in here because you have already seen this. But remember the other day I was teaching you and I said the most important thing is for the market to give you, this is a confirmation, buyers are willing to push price higher. But this happens when they, remember these, when these institutions are selling, they don't just close their positions at once. They're not all going to close at this level. Buyers have shown strength, but they are still in holding their position. So that means price can come. It shows interest of pushing higher. Do you remember when I said how the market starts to range? Do you remember?
Range. I remember you mentioned that once there is a, how do you call, momentum, a high momentum, then at a certain point, I've checked my notes. We looked into ranges, but we didn't go deep into ranges and consolidation. We just touched just on the surface.
I didn't go deep, but I've taught you ranges in I've taught you ranges when we're learning about supply and demand. A range is a distance between one key level to another level. That is a range. When I talk of a range, I'm not meaning of ranging market. The distance between one key level to another level, that is a range. So I combined all those topics once. Okay, I may not have told you maybe this is this, but I have combined them. So when we say a range, the distance between one level to another level, like let me say if it is from there up to here, that is a range. This one is a range. So the movement price makes from one key level to another level, now we shall set this range. Are you seeing this tool? It is called a price range. Are you seeing?
Yes, yes.
So if you come here, the range, how many tips are these? Price moved from here to here. This is the price range. The price range. If you want to get the date range, maybe how long did the price take to move from here to here? This is the date range. So that is a range. I'm not meaning ranging markets or consolidation. It's a different thing. But I remember pointing about this topic and I said, when you are in a trade, you see price is going up like this, and then it makes a high. It again comes and makes a higher low. I mean a lower low. It again comes and breaks above. That one is a start of a range because the market is indecisive. It doesn't know what to do. Price is supposed to respect market structure, not to come here. It takes this low breaks here. It again goes and breaks above. That one, it brings confusion. If the market itself is confused, then how about you, the trader? So that one is the start of a range. Once you see this, because if price breaks and makes a lower low here, it's supposed to respect by making a lower high, but if it makes again a higher high, that brings confusion in the market. I will show you an example of these things on Euro USD, GBP USD. They are there even before the range started. If you remind me, I will show you this. So that's it about head and shoulders pattern.